Could a cryptocurrency known for its wild, often uh, dizzying roller coaster rides, XRP, truly hit an astonishing $30 in this bull cycle? Is that projection pure, unadulterated hype? Or is there maybe a solid, data-driven reality underpinning such an ambitious target?
That's the million-dollar question, isn't it? Or maybe the $30 question here.
Exactly. Today we are taking a deep dive into precisely that. We've gathered some, well, truly fascinating sources, focused specifically on XRP's price potential.
Yeah, looking at market analyses, on-chain data, the whole picture.
Right, drawing from intricate market analyses and that raw on-chain data, our mission today, to peel back the layers of speculation, try to cut through the noise.
There's always so much noise with XRP.
Always. And help you understand what the data actually tells us about XRP's possible trajectory.
What's truly compelling here, I think, is the stark collision we're seeing. You've got these incredibly strong technical signals on one side.
Right, the charts look potentially explosive.
Exactly. But then they're running headfirst into some equally potent fundamental concerns. Real worries.
Okay.
So we'll be navigating both sides of this fascinating debate today, not just presenting the predictions, but really delving into the underlying mechanisms.
And the risks. Let's not forget the risks.
Oh, absolutely. The inherent risks involved. And this entire deep dive, it really raises a crucial question for anyone trying to make sense of these volatile markets.
Which is?
How do we effectively weigh these often conflicting types of information? You know, the technical chart patterns versus the on-chain economic realities. How do you put those together to form a truly informed perspective?
That's the core challenge, I suppose. So, okay, let's start with the optimism. If we're looking for signs of a massive run, where does that blueprint begin?
Well, a lot of the bulls, they point straight to XRP's history, its track record.
And this isn't just like wishful thinking, right? It's rooted in actual past performance.
Precisely. It's rooted in XRP's track record of generating, frankly, significant gains in prior bull cycles.
Okay. Give us some context there.
Think about this. In past cycles, we've actually seen XRP prices multiply by at least tenfold, sometimes much, much more, going from their bear market lows to the subsequent peaks.
10 times or more. Wow.
Yeah. And this kind of historical performance, it's the very fuel for the current hopes, isn't it? You see these sophisticated projections now targeting $30, some even higher.
Potentially by mid-2026, according to some sources.
Right. By mid-2026, it's almost like the market is setting the stage or maybe hoping for history to rhyme, creating this expectation for another, explosive run.
History rhyming. That's a common theme in markets.
It is, and that historical context is undeniably powerful. And markets often exhibit what we call fractal patterns, where similar structures, similar movements, they repeat across different time frames.
So patterns seen before might play out again, maybe on a larger scale?
That's the idea. Now, of course, past performance never guarantees future results. We have to say that.
Standard disclaimer, yes.
But it certainly provides a compelling framework for certain types of technical analysis. And speaking of technicals, one prominent market analyst, Gert van Lagen, he's put forth a particularly precise and, well, quite compelling projection based on this.
Okay, Gert van Lagen. What's he seeing?
His analysis suggests XRP could indeed climb towards $34 this bull cycle.
$34, even higher than our initial $30 question.
Exactly. And crucially, this isn't just like a random guess thrown out there. It stems from his meticulous identification of specific, very long-term technical patterns.
Patterns that have historically suggested big moves were coming.
That's right. Patterns that have historically portended significant moves.
Okay, so what's the cornerstone of this analysis? What's the big pattern?
What makes van Lagen's analysis particularly striking is its foundation, a massive double-bottom structure.
The double bottom.
Yeah.
The W shape on the chart.
Exactly. For those who track market charts, you'll immediately recognize that classic W reversal pattern. It signifies basically two failed attempts by sellers to push prices lower,
Creating a strong floor.
effectively forming a rock-solid support floor, yeah. And it often signals that a prolonged downtrend is exhausted, paving the way for a powerful new uptrend.
Makes sense. But what's special about this XRP double bottom?
Here's the truly crucial detail. XRP broke out of an astonishing 7-year double-bottom structure.
7 years. Did you say 7?
7 years.
Ah.
Just let that sink in for a moment. 7 years of consolidation of price action building up.
Wow. That's a huge time frame for a chart pattern.
It's monumental. And this breakout occurred when XRP decisively moved above its neckline.
The neckline being the resistance level across the top of the W.
Precisely, which was positioned near $1.80. The sheer significance of such a long-term pattern, well, it really can't be overstated.
Why? What does that long duration imply?
It implies a colossal amount of accumulated energy, potentially, and a profound underlying shift in market psychology and, its potential trajectory. This isn't just some minor wiggle on a daily chart.
No, this sounds like a fundamental structural change in the market's view of XRP over the long term.
That's exactly how analysts like Van Loggen would interpret it. And to bolster the strength of this already potent technical signal,
There's more.
oh yes, after breaking out above that $1.80 neckline, XRP did precisely what technical analysts love to see: a retest.
Okay, explain the retest. It pulled back.
Yeah, the price pulled back down to that critical neckline level, the $1.80 mark, and then crucially, that level acted as very robust, very reliable support. Buyers stepped in right there.
So what was resistance became support. That's classic technical analysis, right?
Absolutely textbook. This is profoundly significant in chart terms. A successful retest isn't just a coincidence. It often signals that the initial breakout was genuine, it was strong.
It confirms the move.
It confirms that traders are confident in higher prices, yes. It's like the market's way of verifying that what was once a ceiling is now a solid floor.
Okay.
And this pivotal technical confirmation, it lends substantial credibility to Van Loggen's bullish thesis. It tells you the market, or at least a significant part of it, believes this breakout is for real.
Right, so we have the 7-year double bottom, the breakout above $1.80, and the successful retest. What else does Van Loggen's analysis use?
Well, the analysis extends even further. Van Loggen takes this long-term pattern and applies Fibonacci extension.
Ah, Fibonacci. That comes up a lot in trading. How does it work here?
So Fibonacci extension is a powerful tool in technical analysis. It uses ratios derived from the famous Fibonacci sequence.
The mathematical sequence.
Yeah, to project potential future price targets based on prior market movements. It helps analysts anticipate where a price might head after a significant move, like this breakout.
Okay, so based on the size and shape of that double bottom breakout.
Exactly. In this specific context, Van Loggen meticulously applied the 2.0's Fibonacci extension to the 7-year pattern.
The 2.0 level, is that a common target?
It implies a very strong move. This measured move projection, using that 2.0 Fib extension, points directly to a $34 target.
This is the $34 again.
And he forecasts this could realistically be reached by mid-2026, tying back to that time frame we mentioned.
And choosing the 2.0 extension, that's significant.
Yes, for such a long-term base pattern, using a 2.0 extension suggests the potential for an extremely powerful, maybe even parabolic move. It reflects the immense energy potentially accumulated during that multi-year consolidation.
A parabolic move that certainly aligns with XRP's history of explosive rallies.
It does. And this is where we start connecting the technical dots to the broader market picture. It really underscores how both meticulous technical analysis,
Like Van Loggen's work.
right, and major macro events or critical regulatory shifts, how they can converge to weave these truly powerful market narratives.
So the chart pattern itself isn't happening in a vacuum.
Not at all. And the historical mirroring aspect is particularly compelling here. While markets, they rarely repeat identically.
They often rhyme, as the saying goes.
They very often rhyme. And Van Loggen's analysis masterfully emphasizes this. He draws a direct parallel between the current setup and XRP's remarkable price action way back between 2014 and 2017.
What happened back then?
During that period, a similar multi-year base structure ultimately resolved into an absolutely parabolic rally. It catapulted XRP USD over 100,000% higher.
100,000%.
Yes, an almost unbelievable number, but it happened. And this historical precedent, it provides significant weight to Van Loggen's current analysis.
It shows that these kinds of outsized, almost seemingly impossible moves are actually not unprecedented for XRP.
Exactly. It's a stark reminder of its inherent volatility and its proven capacity for explosive growth when the conditions align.
It's genuinely difficult to ignore that kind of historical performance, even with the caveats.
It is. And even looking more recently, XRP has continued to demonstrate this impressive capacity for sharp, rapid gains.
Yeah, our sources highlighted some recent figures too, didn't they?
They did. They point out that XRP has already gained a staggering 1,072% since its 2022 lows.
Over 1,000% from the bottom.
And before that, during the 2020-2021 bull run, XRP soared by over 1,625%.
1,600%.
Yeah.
These are massive numbers.
Massive. And for a more immediate snapshot, the analysis we looked at mentioned it rallied by more than 550% just since last November, reaching over $3 around the time the source was published.
So these figures, they don't just show volatility.
No, they illustrate XRP's unique character. It's an asset capable of delivering these huge, rapid price movements. It reinforces the idea that large, rapid price appreciation is, well, it's very much within its established character.
Okay, so we see the technical setup, the historical precedent for huge moves, but what drives these moves? What were the catalysts?
Understanding the core drivers behind these past rallies is crucial, yeah.
Yeah,
Because they offer invaluable clues about what might fuel future movements.
makes sense. So the 2020-21 rally, what was behind that one?
For example, XRP's explosive rally in 2021 largely took its cues from a near-zero interest rate environment in the United States.
Ah, the macro picture, easy money flooding in the system.
Exactly. This broader macroeconomic condition, where the cost of borrowing capital was minimal, created this pervasive risk-on sentiment across all financial markets.
People looking for yield anywhere they could find it.
Precisely. Traditional savings accounts offered negligible returns, pushing both institutional and retail investors to actively seek higher yields in riskier asset classes.
Including crypto.
Including volatile cryptocurrencies, absolutely. This massive injection of liquidity acted as a powerful macroeconomic tailwind, lifting basically all digital assets. And XRP, despite its own unique challenges at the time, like the looming lawsuit.
Right, the SEC lawsuit was starting around then.
It was, but XRP certainly rode that wave anyway. It was a classic case of easy money inflating asset prices across the board.
Okay, so that was macro-driven. What about the more recent gains from 2022 into 2025, as the sources put it?
That rally seems to have been primarily fueled by an entirely different, yet equally powerful set of catalysts. The unfolding progress in the Ripple lawsuit itself.
The legal clarity angle.
Exactly. This protracted legal battle with the SEC, it had cast this long and, frankly, suffocating shadow over XRP for years.
It really hampered its price action compared to other cryptos for a long time.
Absolutely. The turning point, arguably, came with Judge Torres's pivotal ruling. The one that stated XRP, when sold on secondary exchanges to retail buyers, was not a security.
That was huge news in the XRP community.
Monumental. It provided crucial regulatory distinction, significantly alleviating some of that overwhelming uncertainty that had forced major U.S. exchanges like Coinbase to delist XRP.
So the ruling directly led to
A wave of exchange relistings. As a direct result, platforms felt comfortable bringing XRP back, which in turn sparked renewed investor confidence and access.
and easier access means more potential buyers.
Definitely. Furthermore, this period saw a dramatic surge in optimism surrounding the potential for an XRP exchange-traded fund, an ETF.
The ETF narrative, that became a huge driver across crypto.
It did, and for XRP, it became a significant psychological and arguably fundamental driver for the bulls.
So that ETF optimism, is that still in play now?
According to our sources, yes. It continues to be a guiding light for XRP bulls in 2025. The prospect of an ETF being approved for XRP is, really without exaggeration, a monumental potential catalyst.
Explain why an ETF is such a big deal. We saw it with Bitcoin, but refresh us for XRP.
Sure. For you, the listener, the power of an ETF, as we vividly saw with Bitcoin, is how it unlocks this floodgate of traditional capital.
Money that wouldn't normally touch crypto directly.
Exactly. It allows a much wider range of institutional investors, think pension funds, wealth managers, large endowments, and also countless retail investors who prefer regulated traditional investment vehicles.
Like buying a stock through their brokerage account.
Precisely. It lets them gain exposure to XRP without the hassle or perceived risk of directly holding the underlying asset, dealing with wallets and keys.
So it just massively broadens the potential buyer base?
Exponentially. It dramatically increases potential liquidity and demand. And our sources indicate that forecasts currently suggest remarkable 95% odds of a spot ETF approval for XRP.
95% odds. That seems incredibly high.
It does seem high, reflecting a lot of optimism post-Bitcoin ETF approvals. But that's the figure cited. And if that green light flashes,
What's the projected impact?
some highly respected forecasts suggest the token could rally toward $27.
$27.
Yeah.
Okay, that's still huge, though slightly below Van Lagen's $34 technical target.
Correct. It's notably close, though. It reinforces this idea that a significant, potentially institutionally driven price surge is very much on the table, propelled by a tangible, foreseeable event like ETF approval.
Okay, this is where the story really seems to come together, doesn't it?
How so?
Well, you've got this compelling bullish case resting on the synergy between these powerful technical patterns, that incredible multi-year double bottom, the retest.
The Fibonacci projection.
Right, and then connecting it directly to these real-world, highly anticipated catalysts, like the growing ETF optimism and the newfound, or at least increased, regulatory clarity from the lawsuit.
Well, it does paint a picture, yeah.
It paints a picture of almost a perfect storm for a potential breakout, wouldn't you say?
Yeah, you can certainly frame it that way. The technical setup, combined with the historical precedents for massive moves, and then layered with the promise of future regulatory embrace via an ETF. It definitely creates a very compelling narrative for optimists.
It feels very aligned.
Yes. And if we consider the broader implications here, it highlights precisely how technical analysis, drawing from that historical behavior of markets.
The rhyming part.
Yeah, the rhyming part. And these macro-level events, or pivotal regulatory shifts, how they can converge to create incredibly powerful market narratives. The historical mirroring we discussed is particularly compelling.
Because it suggests this isn't just a random chart pattern, but maybe part of the larger cycle.
Potentially. Markets often exhibit these rhyming patterns, even if they don't repeat exactly. So this isn't just a simple technical prediction. It's really a multifaceted argument for significant upside. It draws from multiple layers of market analysis.
From the micro-level chart patterns.
Right, up to the macro-level economic and regulatory environments. However, and this is a big however.
I sense a but coming.
It's crucial to remember that financial markets are almost never a one-sided story. Every compelling bull case usually has a counter-narrative, some bearish points that deserve equal scrutiny.
Okay. And that's exactly the next step we need to take, right? Before we get too swept up in the $34 dream.
We need to ground ourselves.
We have to flip the coin and look at what the underlying fundamentals are actually saying. Because, according to our sources, they present a very different story.
Flashing some significant red lights.
Exactly. Red lights regarding potential overvaluation risks and some challenging supply dynamics. So what does this all mean for the reality part of our question if we pull back from the chart optimism and look at the economic engine underneath?
This is where we shift perspective, moving from that optimistic technical outlook to a far more cautious fundamental view, addressing the potential risks that could genuinely challenge this otherwise rosy bullish narrative.
So where do the fundamental concerns start?
Well, while that technical picture appears robust, the underlying fundamentals of the XRP ledger, the XRPL itself, they present a contrasting and, frankly, somewhat concerning view.
Okay. What's the issue with the XRP ledger?
According to recent data cited in our sources from Deflama, the growth of XRP's parent chain, the XRPL, it lags significantly behind other major Layer 1 blockchains.
Lagging behind networks like Ethereum, for example.
Including giants like Ethereum, yes, and others too. And this is a critical point because a blockchain's underlying utility, its actual adoption, the economic activity happening on its network.
That's usually seen as the foundation for long-term value, right?
Absolutely. Those are widely regarded as fundamental drivers of its long-term sustainable value. So if the network itself isn't seeing commensurate growth in real-world usage and, importantly, value locked within its ecosystem,
it raises questions.
It raises profound questions about the sustainability of its token's valuation, regardless of what the price charts might be suggesting in the short or medium term.
Okay, so lagging growth in usage. How does that manifest in the data?
This lagging growth leads us to a really stark and quite concerning metric. The disparity between XRP's market cap and its total value locked, or TVL.
Market cap versus TVL. Okay, let's break that down for everyone listening.
Sure. Market cap is pretty straightforward, right? It's the total value of all the XRP coins in circulation. Multiply the price per coin by the circulating supply. It's the project's overall public valuation.
Got it. And total value locked, TVL.
TVL, on the other hand, represents the total value of all the crypto assets, could be other tokens, stable coins, even XRP itself, that are deposited or locked into decentralized finance DeFi protocols running on that particular blockchain, in this case, the XRPL.
So it measures the money actively being used in DeFi applications on the network.
Exactly. It's often seen as one of the best measures of a blockchain's actual economic activity, its genuine utility within the burgeoning DeFi space, and the real value being generated and utilized by its ecosystem. It's about usage, not just holding.
Okay, understood. So what's the disparity you mentioned for XRPL?
And here's where the contrast for XRPL becomes, well, alarming, according to the sources. Its current market cap, cited at around $190 billion.
Which is huge.
Massive. Is roughly 2,200 times larger than its $85 million total value locked.
Wait, 2,000 2,200 times?
2,200 times larger, yes. Market cap is 2,200x the TVL.
That seems astronomically high. How does that compare to, say, Ethereum?
Right. To truly grasp the gravity of this, compare it with Ethereum. Ethereum is universally recognized as the undisputed leader in DeFi, processing billions in transactions daily. Ethereum's market cap to TVL ratio is about 5.6.
5.6 compared to 2,200 for XRP.
Exactly. So even though XRP's valuation at $190 billion is nearly 40% of Ethereum's massive market cap, a significant fraction.
Its actual on-chain activity, the value locked in DeFi as measured by TVL, is absolutely minuscule in comparison.
It's like having, I don't know, a skyscraper valued at nearly half the price of the Empire State Building, but with only like one floor occupied.
That's a truly astounding difference. So what's the core implication here? What are analysts concluding from this massive disparity?
Our sources suggest that such a monumental gap has led to significant, deeply rooted concerns over XRP's extreme overvaluation relative to its actual verifiable on-chain utility and activity.
So the price doesn't match the usage, basically.
That's the argument. It very strongly implies that XRP's current price might be driven far more by speculation, by narratives.
Like the lawsuit outcome, the ETF hoax.
Exactly. Driven more by those things rather than by genuine organic network usage and utility happening right now. For many fundamental analysts, this disparity isn't just a minor concern.
It's a major red flag.
Such a bright red flag, yes. It calls into question the long-term sustainability of such a high valuation if the underlying activity doesn't catch up.
That makes sense. It's a fundamental mismatch.
And it raises that important question for all of us. What does it truly mean for a network to command such a massive valuation, approaching that of established giants like Ethereum in market cap, but have relatively little economic activity locking real value into its ecosystem?
Yeah, what does it mean?
This market cap to TVL ratio, it's often seen as a fundamental health indicator for blockchain ecosystems, and XRP's ratio is clearly an extreme outlier.
Now, defenders might argue XRP's main use isn't DeFi, right? It's payments.
That's a fair point, and it's often raised. XRP's primary intended use case is cross-border payments, not necessarily competing directly with Ethereum on DeFi. However,
the scale of the difference is still hard to ignore.
The sheer scale of this disparity, 2,200x, suggests that even accounting for the payments focus, a significant portion of its current value might indeed be speculative. Based more on future hopes and regulatory breakthroughs than on present-day, verifiable utility across any vertical, including payments where adoption data can also be opaque.
Okay, so for investors prioritizing that fundamental strength, tangible adoption happening now.
For them, this disparity stands as a considerable red flag. It urges, at the very least, extreme caution.
All right, so the market cap to TVL ratio is one major warning sign. What else did the sources flag on the bearish side?
Well, if that wasn't enough to add to the caution, our sources also bring up another critical metric. This one derived from Glassnode data.
Glassnode, the on-chain analytics firm.
Okay. They looked at the XRP percent supply and profit.
Percent supply and profit, what does that tell us?
This metric reveals the percentage of the circulating XRP supply whose acquisition price, the price where the holder bought it, is lower than the current market price.
So basically it shows how many holders are sitting on unrealized gains.
Exactly. And as of August, when this data was compiled for the source material, it stated that over 95% of XRP's supply is in profit.
Over 95%, that sounds really high. Almost everyone is in the green.
That, for context, is an exceptionally high threshold, almost unheard of in normal market conditions for an asset of this size. It implies very few people are currently holding XRP at a loss relative to the current price.
Okay. But why is that necessarily a bearish signal? Isn't it good that holders are making money?
Here's precisely why that figure is so concerning, beyond just being a high number. There's a strong and consistent historical precedent specifically for XRP.
Oh, what's the history here?
During both the explosive 2020-21 rally and the more recent 2022-25 rallies that we discussed, this exact threshold, the point where over 95% of the supply was in profit, consistently preceded sharp, often quite brutal, price correction.
Really? Every time it hit 95% profit, a correction followed?
Consistently, according to the source's analysis of that historical data. This isn't just a statistical anomaly, it's presented as a powerful historical warning sign for XRP specifically.
Wow. Okay, what's the mechanism? Why does it happen?
The underlying mechanism is fairly straightforward. It's almost a natural law of market psychology, you could say. When such a large share of holders is sitting on substantial unrealized gains, The temptation for profit-taking naturally accelerates. It just makes sense.
People want to lock in those profits.
Exactly. People who bought in at much lower prices, maybe they've been holding for years, they'll inevitably be tempted to sell, to realize those paper gains and turn them into actual cash or stablecoins.
And if lots of people start selling,
it creates significant and sustained sell pressure in the market. More sellers than buyers at current prices pushes the price down. It's like the pull of gravity on a price that has risen significantly without major pullbacks.
So this isn't just a theoretical concern based on a number. It's a dynamic that has historically and repeatedly impacted XRP's price, regardless of how strong the bullish narrative might have seemed at the time.
That's the argument presented in the sources, yes. And this raises a crucial point for the current situation.
Which is?
Such a widespread profit-taking dynamic, if history is any guide, could significantly challenge XRP's ability to sustain its current uptrend toward that ambitious $30 or even $34 target.
Even if the technicals look perfect and an ETF seems likely.
Even then, it's a natural, almost inevitable market force that can halt or even reverse rallies, precisely because long-term holders or even short-term traders seeing those high profit levels decide it's simply time to cash in.
It's a stark reminder that even the strongest technical patterns can be overwhelmed by these fundamental supply and demand dynamics driven by, well, human behavior and the desire to take profits.
Precisely. So what's truly fascinating here, when you step back, is this undeniable tension. The tension between what the chart suggests is overwhelmingly possible, this monumental breakout towards $30, $34.
Based on that 7-year pattern and historical precedent.
Right. Versus what the on-chain data reveals about the underlying economic reality of the asset, the lagging TVL, the extremely high percentage of supply and profit.
It's a clash of narratives.
It really is. And this is precisely where critical thinking becomes absolutely essential for anyone looking at this. It's not about just picking one data point you like and ignoring the others.
No, you have to try and reconcile them, or at least understand the conflict.
Exactly. It's about triangulating across these vastly different types of indicators. You have this incredibly bullish technical setup supported by compelling historical parallels.
At least you want to jump in.
But then you have these fundamental data points like the market cap to TVL ratio and the supply and profit metric flashing a bright red warning light.
Makes you want to run away.
Yeah. It's a classic market dilemma, isn't it? It forces you to truly weigh the probabilities, the risks, and rewards. It's the technical optimism versus the fundamental skepticism, creating this complex, challenging picture.
Okay, let's try to synthesize this. So if you're a learner, maybe someone relatively new to crypto or just trying to make comprehensive sense of XRP specifically,
yeah,
you're presented with this powerfully compelling story of potential.
Yeah.
It's meticulously backed by historical chart patterns, that 7-year base, the retest, the Fibonacci targets.
And the very tangible prospect of significant regulatory milestones like an ETF approval, which could unlock huge amounts of capital.
Right. But simultaneously, you're presented with these stark warnings. Warnings about underlying value, that huge TVL disparity, and market dynamics like the supply and profit metric that have historically led to severe corrections for this specific coin.
Two very different viewpoints from the same set of sources.
Exactly. So it's clearly not a simple yes or no answer to the $30 question, is it?
Absolutely not. It demands a far more nuanced understanding. It forces you really to look beyond any single headline or any single analyst prediction, no matter how convincing either side might sound in isolation.
So the key is understanding the interplay.
I think so. If we connect this to the bigger picture, it just underscores how immensely complex and multifaceted these cryptocurrency markets truly are.
It's not simple.
Not at all. It's simply not enough to just look at a price chart and assume the trend will continue forever. Nor is it sufficient to rely solely on one fundamental metric, like TVL, and dismiss the powerful influence of technicals and market sentiment.
Because both clearly play a role.
They do. Understanding the intricate interplay and, crucially, the potential conflict between these different data points is absolutely key to being truly well-informed.
How might different people weigh these conflicts?
Well, think about it. For a pure fundamental investor, that 2200x market cap to TVL disparity probably shouts a much louder warning than any beautiful chart pattern.
They'd see it as fundamentally unsound at this price.
Potentially, yes. But for a pure technical trader focused solely on price action and patterns, that 7-year double bottom breakout and its confirmed retest, those are the undeniable green lights. The fundamentals might be secondary to them.
So it depends on your approach.
It often does. But the goal, perhaps, should be to build a more robust framework for decision-making by considering both sides of the coin, acknowledging the strengths and weaknesses of each argument, and weighing the probabilities of each scenario playing out.
Right. This deep dive really hammers home that being well-informed in crypto isn't about finding the single right answer or the perfect prediction.
Because those rarely exist, especially beforehand.
Exactly. It's more about understanding the multiple perspectives, understanding the different tools people use to analyze the market, and crucially, understanding where the potential conflicts and risks lie.
Knowing the bull case and the bear case.
Precisely. It's about more than just fixating on a price target like $30. It's about understanding the complex forces at play, market sentiment, technical analysis patterns, underlying fundamental adoption, supply dynamics, all constantly battling it out.
It's dynamic.
Very. And it also powerfully illustrates how these different analytical approaches, the technical chartists versus the fundamental on-chain analysts, can yield vastly different insights, sometimes diametrically opposed conclusions.
Which, again, highlights why it's absolutely crucial to look beyond the sensational headlines or the loudest voices on social media and try to truly grasp the underlying data from multiple angles.
Okay, let's quickly recap the key takeaways for someone trying to hold all this in their head on the bullish side.
On the bullish side, you have that massive 7-year double bottom breakout confirmed by the retest of the $1.80 neckline acting as support.
Strong technical signal.
Very strong. Then you have the Fibonacci extension analysis pointing towards a $34 target. You have XRP's own history of delivering 10x or even vastly higher returns in past bull cycles.
That's historical precedent.
Right. And you have the very strong potential catalyst of a spot ETF approval, with some sources citing 95% odds, potentially driving price towards the high $20 or beyond.
Okay, that's a compelling bull case. Now, the bearish counterpoints.
On the bearish, or at least cautious side, you have that vast disparity between XRPL's huge market cap and its relatively tiny TVL, that 2200x ratio compared to Ethereum's 5.6x.
Suggesting potential overvaluation relative to current on-chain economic activity.
Exactly. And then you have the on-chain metrics showing over 95% of the XRP supply is currently in profit.
A threshold that, historically for XRP, has consistently preceded significant price corrections due to likely profit-taking.
That's the summary of the core conflict presented in our sources.
So tying it all together, is $30 XRP hype or reality?
Well, as you've heard today, the answer, like so many things in these complex dynamic markets, it really isn't simple, is it?
Doesn't seem like it.
It seems to be a compelling blend of powerful technical possibilities suggesting, yes, it could happen, and some significant cautionary fundamental realities whispering, maybe not so fast.
We've unpacked the sources, we've explored the fascinating technical details and the concerning fundamental metrics, and now, really, it's up to you, the listener, to consider what stands out most from this deep dive. Which arguments resonate more? Which risks seem more pertinent?
Yeah, this exploration truly highlights that in highly volatile assets like cryptocurrencies, understanding the full spectrum of data is just crucial. You need to look from the very long-term chart pattern spanning years.
Like that double bottom.
Right, down to the granular real-time on-chain activity like TVL and holder profitability. It's about building that robust framework we talked about for making sense of these often conflicting signals.
Which leads us to a final thought, maybe something for you to ponder after this.
Given XRP's unique position right now, sitting at this intriguing intersection of, on one hand, long-awaited potential regulatory progress with the lawsuit clarity and ECF hopes.
And on the other hand, these potentially challenging on-chain metrics suggesting overvaluation and sell pressure.
How do you personally weigh the promise of that technical breakout against the signals of fundamental weakness or overvaluation?
It's a tough balancing act.
It is, in a market that's undeniably driven by both powerful speculation and the slower development of real-world utility. Which force do you believe ultimately prevails for an asset like XRP in the long run? Is it the narrative in the charts or the underlying economic reality?
Something to definitely mull over, a fascinating puzzle, and the answer might only become clear in hindsight.
As it often does in markets.